Welcome back to the channel, and thank you for joining me. I'm Algabot, and here we break down automated trading strategies for MetaTrader 5, one expert advisor at a time. Today we're studying a strategy called Tiered Breakout Retest. This one is a little different, because it's a pure price action system that uses no indicators at all. There are no moving averages and no oscillators anywhere in the logic. Instead, it reads raw market structure across two cooperating time frames to spot genuine breakouts and time-precise entries. By the end of this video, you'll understand how it builds a higher time frame, how it detects a break of structure, and how it confirms and manages every trade. Let's dive in. So what exactly does Tiered Breakout Retest do? At its heart, this is a multi-timeframe breakout system built entirely on price action. There are no moving averages, no oscillators, and no lagging indicators of any kind. Everything the strategy decides comes directly from the highs, lows, and closes of the candles themselves. The expert advisor works on two cooperating tiers. The first tier is the higher time frame, which the strategy builds internally. Because the testing engine only feeds one time frame, the code aggregates a fixed number of primary candles, 12 by default, into a single synthetic higher time frame candle. On that higher time frame series, it tracks swing pivots and watches for a break of structure. When a higher time frame candle closes beyond the most recent opposing swing, the strategy establishes a directional bias, either long or short, and it remembers the exact level that was broken. The second tier is the lower time frame, which is your primary chart. Here the strategy waits patiently for confirmation. It looks for a momentum candle that pushes through the previous bar's extreme in the direction of the bias, while still holding on the correct side of that broken level. That behavior is the reclaim or retest that gives the strategy its name. This kind of approach tends to suit traders who appreciate structure-based, swing-style trading rather than rapid scalping. It trades selectively, taking only one position at a time and only one entry per break of structure event. It can be applied to forex pairs, indices, metals, or any liquid market where clean swing structure forms. And because it is pure price action, it adapts naturally to different instruments without needing indicator settings retuned. Remember, everything here is for educational purposes only, so we are studying how the logic behaves, not promising any particular outcome. Let's walk through exactly how the strategy makes a decision, step by step. Everything begins on each newly completed primary candle. The expert advisor takes that finished candle's high, low, and close and feeds it into its higher time frame builder. It keeps stacking candles until it has collected the chosen number, 12 by default, and then it finalizes one synthetic higher time frame candle from their combined range. Each time a higher time frame candle is finalized, the strategy updates its bias. First, it checks whether an existing bias has become stale. If price has closed back through the level that was originally broken, the bias is canceled and the strategy steps aside. Next, it scans the higher time frame series for the most recent confirmed fractal swing high and swing low. A swing is only valid if it stands above or below a set number of candles on both sides, and that strictness is controlled by the pivot strength setting. Now comes the break of structure. If the latest higher time frame candle closes above the most recent swing high, the strategy flips to a long bias and records that swing high as the reclaim level. If instead it closes below the most recent swing low, the strategy adopts a short bias and stores that swing low. Each new break resets a flag, so that only one trade is taken per event. With a bias in place, attention shifts to the primary time frame for the trigger. For a long, the strategy requires three things at once. The trigger candle must close higher than it opened. It must close above the previous candle's high, and it must close above the stored reclaim level. When all three line up, the expert advisor signals a buy. The short side is a mirror image, a bearish candle closing below the previous candle's low and below the reclaim level. Risk is then defined by structure, not by guesswork. For a long, the stop loss is placed at the most recent primary swing low, padded by a fraction of the trigger candle's range. For a short, it sits just above the recent swing high. The distance from entry to stop becomes the measured risk, and the take profit is set at a fixed reward multiple of that risk, 2 times the risk by default. Finally, the strategy only ever holds one position at a time, so it waits for the current trade to resolve before considering the next. Let's look at the actual MetaQuotes language code that powers this, just as you'd see it in MetaEditor. At the top are the input parameters you can adjust. HtfFactor sets how many primary candles are merged into one synthetic higher time frame candle. A larger value means a slower, broader higher time frame. Pivot left-right controls how strict the swing detection is. Higher values demand more candles on each side of a pivot, giving you fewer but stronger swings. Confirm swing bars decides how far back the strategy looks when placing its structure stop. RewardMultiple is the reward-to-risk ratio applied to the take profit. BufferFrac adds padding to the stop as a fraction of the trigger candle's range, and lots is simply the fixed trade size. Now to the signal logic. When the bias is long, the code reads the trigger candle's open, high, low, and close, along with the previous candle's high. The condition block checks three things together: that the close is above the open, that the close is above the prior high, and that the close is above the stored bias level. If any one of those fails, the function simply returns and no trade is taken. Once the conditions pass, the strategy calculates its risk. It calls swing low over the confirmed swing bars window to find the recent structural low, subtracts a buffer derived from the trigger candle's range, and that becomes the stop loss. The entry is the current ask price, and the risk is the distance between them. The take profit is the entry plus the reward multiple times that risk. Finally, enter trade sends the order. The short side, which we're not showing here, is the exact mirror of this logic using the bid price and a swing high. Let's bring it together on the chart and watch how the strategy uses market structure rather than any indicator. Early on, price is trading just beneath a higher time frame swing high, drawn here as the blue dashed reclaim level. Notice the small pullback candles forming the setup. Then a strong bullish candle pushes up and closes above both the previous candle's high and that blue reclaim level. That is the break of structure being confirmed on the lower tier, and the buy entry fires right there. The stop loss tucks beneath the recent swing low, and the take profit projects upward at twice that measured risk. Over the next few candles, momentum carries price higher until it reaches the take profit target, and the long trade closes in profit in this illustration. Now the market shifts character. After topping out, price rolls over and begins carving lower swings. A new structural level forms, shown as the red dashed line, marking the swing low the strategy is watching. Price bounces toward it, sets up a prior candle, and then a decisive bearish candle closes below both the previous candle's low and that red level. That triggers the short entry. This time the stop loss sits just above the recent swing high, and the take profit projects downward at the same fixed reward multiple. Price slides lower over the following candles and reaches the short target, completing the sell sequence. Notice what is missing here. There are no oscillators, no moving averages, and no overbought or oversold readings. The only reference lines are the broken structure levels themselves. That is the essence of tiered breakout retest. It reads pure price action, confirms a breakout against real structure, and manages every trade with a clearly defined stop and target. Remember, this is a clean, illustrative example for educational purposes only. And that brings us to the end of our breakdown of the tiered breakout retest strategy. We covered how it builds a synthetic higher time frame, how it detects a break of structure to set its bias, how it waits for a momentum candle to reclaim the broken level before entering, and how it defines its stop loss and take profit from real market structure. I hope this gave you a clear, practical understanding of how a pure price action breakout system can be coded and automated. Everything in this video is educational content only, and it is not financial advice. If you found it helpful, please give it a like, subscribe for more MetaTrader 5 strategy breakdowns, and drop a comment with any strategy you'd like me to analyze next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.